Good morning. I'm hoping that everybody can hear me and see my screen. My name is Jodie. I'm running the session today. I'll give it a minute and we'll start at 10. I do apologise. I seem to be having some issues with my camera in that I keep going in and out of focus, and when I'm going to start looking at my bigger screen in a moment, I'll be a bit of a blur. But as long as you can see my screen and hear me, that's all that we really need. A couple of housekeeping rules. Everybody is automatically on mute, but if you have any questions at any point, please do pop them in the chat box. I've got a couple of colleagues here with me that'll be answering questions as we go through, but equally if there's anything complex that needs to be shown at the end of the session, I can run through that when we get to the end. So I'll make a start now. We are going to cover today an intro to CashCalc. So we'll start off just with some basic navigation, finding your way around the system itself, and then we'll look at an integration. I've recently got access to Xplan. I do normally show the IO integration, but we'll use Xplan for today's session. Then we can have a look at some of the onboarding functionality, which refers to our client portal, inviting clients to submit their own fact finds and share documents, etc. Then we're going to build a really good base cash flow forecast and look at a couple of what if scenarios. I'm hoping we'll have time at the end to look at some of the integration capability between FE Analytics and CashCalc, and I will, of course, come back to any questions. So I will start sharing my screen. I've now got, I already am sharing my screen, but we'll look into CashCalc now. So this is the home screen of CashCalc. A few things to point out. Any of your recently worked on clients will sit over here, and you can view your entire client list at the top here. There are a couple other buttons. Adding a login is for if you have an advisor license and you want to set up a second access point for your paraplanner, you can do that, as well as if you have another advisor join the team and you need to add them a license, you can add their login there. If you use FE Analytics and have the same email address to log in as you do CashCalc, we have single sign-on across both systems. So from within CashCalc, you can just click Analytics and it'll take you straight into that part of the system. Book a demo. We have a couple of options in here. We run CashCalc training weekly. We have 2 sessions a week, one that does a deep dive into the onboarding and another on the actual gross cash flow modeler itself. And then we also have some pre-recorded videos in here as well. For any emergencies where you have questions and need support immediately, we do have a customer support team and their details are available here. That's both telephone and email address. And then we're going to now hop into settings. So there are a few things that you might want to set up in your CashCalc account ahead of starting to do the work in the system. So firstly, your branding. You can apply your branding here and that will filter across. So anywhere where you see this logo would have your logo. So that's going to be on the client portal invitations, on any reports that are generated. So you can upload your branding here. And the next point I want to show is our integrations. So we integrate with quite a few back office systems. We have a 2-way integration with some of the big names, but we also do actually have an open API and are willing to integrate with anybody. The way that typically works is we give them the keys and they build the pathways. So IntelliFlow, Xplan, Curo, they all have 2-way integrations, and today I'm going to show a bit more on the Xplan version of that. Further down, we've got some other bits that you might want to set up under onboarding and client portal. We do have a base fact find in the system, which I will be using today, but if for any reason you think you want to add additional questions or additional pages to the fact find that I'm going to show today, you can build templates in here and then apply that to any onboarding you do for a client. We also have the option to upload things you need regular access to. So if, for example, you have a URL that you share with every client, or you have disclosure documents, things like a welcome brochure or a terms of business, you can upload these in this section, and when we come to onboarding a client, we just toggle them on and don't have to go browsing through the folders of your computer. Client self-onboarding is a slightly different version of onboarding, and a use case for this that I tend to see is where your website might perhaps include a button that says something like, if you'd like to become a client, click here. The client would then click here and they come in as a lead for you. So you embed that link into your website, client provides some basic information, and then you can continue in sort of working out whether or not they're going to become a client of yours. If I go back to the home screen, I've got my integration set up. Now, the benefit of doing that is that we don't have to key all that data again. It's already been keyed into my back office system. I can now drag it through into CashCalc. So I'm going to add a new client or view my existing clients and then add a new. Now I could just manually start typing in client's name and date of birth, and then we'd have a blank client record that needs filling. But I'm going to import from back office. You can search first name, surname, or both. But this is the client I want to bring through, so I'll click on her. If you are working or running a cash flow on behalf of a household, a husband and wife, for example, you can at this stage include the partner or spouse and do the exact same thing, add in Mr. But for this particular forecast, we're just looking at one individual. So I've added the client, and if I just hop back to clients, they now exist here with this tag to say that they are integrated with Xplan. You can also see here we've got some IntelliFlow ones as well. So if I go back to the client record, we've got a net worth that is populated. And if I hop over to my client information page, I can then break down what that net worth is made up of. So we have a series of tabs running along the top here. So I'm just going to work my way through them and explain a little bit about what we're seeing. So we have all of the basic information. Any integration is only ever as good as the information that is sitting in the back office. So where you see these gaps, it's that I haven't filled those in there. They would pull through if it was a fully fleshed out client record in Xplan. The servicing tab acts almost as a diary for you to keep against the client record. So you can put notes of any recent conversations that you've had. You can keep key documents up to 5 per client if you want to keep their ID or any pension statements for quick access. You can add those in here. And you can also schedule reviews. Now, scheduling a review within CashCalc will automate the process depending on when you want it to start. But hypothetically, if you have a client review in, I don't know, June, you can set up a reminder that goes out 2 weeks prior and prompts the client to go in and check on their fact find and submit any changes ahead of your meeting with them. And you can see here all the different things that you can toggle on. You can request a new ATRQ, for example, also. Then we have the client's risk profile. We are going to come back on to that in a moment. This particular client has an ISA, a pension, a property, no liabilities, and we've got a gross salary that is pulled through as well, and some ongoing expenditure. So we've got this information in CashCalc. I could absolutely update a calculator and start running some cash flow here, but we're going to go through the onboarding first. So if I hop over to the onboarding tab along the top, I need to invite the client to the portal. I can either send an email via CashCalc, which will send them this, again, with your branding, your colour scheme. And essentially it's telling the client that a secure portal for you to share information between advisor and client. Alternatively, you can choose to receive a link, a URL, and you can get that off to the client in any other which way you please. Both options need a verification. So if I'm sending it myself, I'm going to put the client's email address in clear.demo@demo.com. And then beneath this, we have all of the different points I want the client to interact with. So if you have gone on to create a custom fact find, this is where you can choose the other templates. But in this case, I am sticking with the base fact find that exists within the system. My preloaded disclosure documents that I mentioned a moment ago, they are now available here for me just to toggle on. So I'll add in read-in material and our privacy policy. For any bespoke documentation that is client specific, you can just click send new document and it would just be a case of finding that file in your computer, and you can pop in some instructions as well. Links, as I said, anything with a URL that you might want a client to look into. So news articles, link to your website, for example, they can be added there, but I don't have any of that to send this client. I am going to toggle on the ATRQ. We can choose to include capacity for loss and knowledge and experience, which I am going to do in this case, but you can exclude them if you prefer. We also have an ethical screening questionnaire. We'll pop that on. And we do have an integration with a company called Credas that allows for AML checks. It's a fictitious client that I've got here, and it's really difficult to run an AML on somebody who doesn't actually exist. So we'll keep that switched off for now, but the functionality does exist should you want to have a look. And then I'm going to send the invitation. Now, I haven't actually sent anything to the client at this point because I chose to send the link myself. So I've got the URL here, so I'll just copy that. And everything we see from this point onwards is what your client would see when they see that, when they receive that link or when they click it. So the client first needs to pop in their email address for the verification. Can then set themselves a password. And then the system will prompt them to actually log in using those credentials that we just set. And everything that I requested action for is sitting front and center. I've also just had an email come through to my inbox saying that Claire Coleman has successfully created their secure portal account. So we will receive notifications for any major changes that happen within CashCalc. And we're just going to work through these. So privacy policy at the bottom, if I click view here, this particular document, I'd toggled on that I wanted to include a digital agreement. So the client can at this stage confirm they've read the document and accept or decline. If I click to accept, I'll show you exactly what that does, but essentially it watermarks the document with some key information about the client giving their digital agreement. Read-in material, there were no actions on there, so the clients opened it, and you'll see as we work through each of these different action points, they are hopping off the list. essentially it's a to-do list. They're moving over to their relevant tabs over on the left-hand side here. Our sustainable investing questionnaire goes through some key information just to give you a flavour as to how important ESG matters are to a client. So let's say the client doesn't have any experience with sustainable investing, but they are interested in it. They can then choose which particular topics they are most passionate about. They can also say that they're broadly interested in a variety of them. Then we have how important those matters are to the client in relation to how much they would allow it to affect their money. So I will say I want to make a positive impact, avoiding specific areas that support my views. And we then have an order of prioritization. So let's say I want to avoid controversial business practices, and I'll keep the rest as is. Some final comments that the client can submit, and then they can send that back, and it gives a grading sort of out of 5, in this case medium. So ESG is on the cards for this client. We can close that off, and we're now building up a profile for this client. And as I say, it's the client themselves that would be doing this. Now, the ATRQ itself is powered by eValue, but everything after that has recently been brought in-house to FE. So we have quite a lot of documentation available. If you would like to receive that documentation, we did send an email out earlier this, I think it was sort of first week of January. But reach out to any of your contacts at FE and you'll be able to get a copy of that. But I'm just going through the ATRQ, then we come to our capacity for loss and knowledge and experience questions. And we can finish and review and then submit that back. So the process that we have here in CashCalc, but for anyone that's using FE Analytics, it is the same ATRQ that exists in the investment planner part of that system. The only real difference is that when it's completed via CashCalc, the client gets a view of it before you lock the answers in. Of course, you can make changes if following this there are, questions or you need to make an adjustment. But the client gets an idea as to sort of where their appetite for risk is currently landing. Then we have the fact find, which is the star of the show where the portal's concerned. So if I click start, now all of that information I previously brought through from Xplan will actually already be in this fact find. So the client's not expected to spend hours on filling information in. It takes the average client 18 minutes to complete the entire fact find. And anecdotally, when I applied for my mortgage nearly 8 years ago, I had to take half a day's annual leave to essentially fill in a fact find. I could have done it on the sofa with a glass of wine, and it would have been much quicker. So we give that option via the portal here, so clients can complete this themselves. And essentially, it is built with the view that clients would be completing it. So whilst it gathers all of the key information you need to build successful cash flow models, it isn't financial service jargon heavy. So we'll just work our way through and I'll pop in some details as we go. As I say, a lot of this has already populated, but let's say they own their property with no mortgage. They have a dependent here. And the system is dynamic, the fact find system. It will chop and change depending on what information is keyed in. So I'll just pop in their national insurance number. But we have employment here. As an employed client, we are going to ask about their occupation and when they'd like to retire. But if they were a sole trader, we'll ask a different set of questions versus if they are not working, or retired. It changes depending on what we input. So in this case, the client is hoping to retire at age 60. So we'll put that in. Their income is already pulled through. And the expenses section has quite a lot of prompts and reminders for different kind of expenses clients might have. So they can itemize everything. They can have a different line for their gas and electric and council tax, but they can also group things together, which is what I've got here. I've got total personal expenses and total housing expenses. The pension is already added in, as well as that ISA and also their property. So this is a link that we have with, a link with property data and land reg. I do sometimes get them mixed up. I think one of them does the postcode lookup, which I believe it would be land reg, and the property data does a check on sort of properties that are selling in that area at the time. It also pulls through the acquisition date, so we know what the house was purchased for, and then it gives clients an idea as to how much their property has grown in the years that they've had it. So it is quite a nice feature, and this is available within the client side of the fact find. No loans or mortgages for this particular client. We do have some information on health and protection, and we do also have another integration in this fact find with iPipeline that gives an indicative life insurance or life insurance quote. And another small thing the fact find can do, which can be quite powerful, is it remembers answers that have been put in. So in this case, this fact find has flagged that Claire has a dependent and no will or life insurance. So it's almost prompting the client to speak with their advisor about that. So I can create that as an objective there. Client can then review the information they've submitted, and once they are happy, send that over to the advisor. A lot of these features are two-way, so where we have the documents, for example, the client can actually upload documents to send to you. Everything in this portal is encrypted in transit and at rest, so it is definitely a safe environment to be sharing sensitive documents and data. And we also have a secure messaging feature as well. So if we message the advisor to say we're all done, that's gone through now. So that is everything from the portal side. I'm going to hop back in now as the advisor and show you what happens once the client has completed that process. So I'll just refresh my page. So the first thing you'll notice is the changes on this onboard and manage page. We've got an activity log here. So if I print that report, everything that goes on between client and advisor, paraplanner via the portal is date and time stamped with details of what was completed. So this is really your compliance tick. There will always be a record of you having sent a document, a client having opened it, accepted a document, for example. You'll have all of that here. And this will just continue building over the years you look after a client. We then have some notifications. So created a portal account successfully, accepted documents, etc. So if I go over to the private, you can view these then via the notifications, but you can also find them along their relevant tabs at the top. So if I go into the privacy policy and view that, this is the watermarking that I mentioned. So we have the client's name, date of birth, name, date and time of acceptance, their email address, as well as their IP address when they accepted the document. The ATRQ has come in complete and ready for review. So the advisor can now review that, and at the bottom make the selection. In this case, risk level 3, medium term or long term, sorry. And you can also pop in some comments. If I go over to the ethical screening questionnaire, that is complete. You can print it, you can view it. But I'm going to go over to the fact find section. This is the one that's going to need a bit more time to review. But it will only ever give you the changes that have been made. So you are not going to have to review a client's date of birth and name every time they submit a fact find unless it changes. So we've got the information that was previously stored on the system versus the new fact find value. So if for any reason anything doesn't look quite right, you can say, well, actually, no, keep what we had before. In this case, it was nothing. But you work through everything that's been added, save and proceed, and this then updates the information as per this client information page. And just to close the loop, if I hop over to client integrations, I brought all this information through from Xplan. I can now send the telephone number back to Xplan, for example. This is a home phone, so I'll export that. And I can also export the mobile. And just to be sure, I can then click to reconcile, which will look at all of the information I have in CashCalc versus the information I have in Xplan for this particular client record, and it will flag where there are inconsistencies. You can then go in and correct those inconsistencies and say, well, this one's correct. This information point is the right one. Let's have that across both sides. So the integration just works through each of the different categories there. We'll just give that a moment to whirl on. We can then review those changes, and this is essentially telling us in CashCalc, this is the information that you have in Xplan. You didn't have anything. This is the information via CashCalc, and if I click update, it will now push that information through to Xplan for me. So that's all done. So we'll hop back to client information. I also have that message that's come in from the client, all done. And we'll close that. So I'll just do a quick sweep over any questions that have come through before we jump into the actual cash flow modelling part of it. So bear with me. So there's a question about permission to put clients' data in the system. I think that would be something governed by the firm you work at, rather than something we would, we would enforce as such. When you invite a client to the portal, there is a link to a privacy policy, and the client has to tick that they are happy to put this information in. And just for everybody's peace of mind, CashCalc is the data processor. You are the data controller, so we don't do anything with the data that is input into CashCalc. We just process what you tell it to do. But yeah, I think that would be something you would need to check with the firm that you're working at. I think the other questions have been answered within there. Okay, so next step is to push this data into an actual cash flow. So at the top, we've got Update a Calculator. We'll click into that. We have a couple of calculators we could send this information to. You can see them all down here. And you'll also spot that we have two versions of our cash flow modeler. I'm going to cover the gross. It is, for me, the more comprehensive on the outputs. So we're going to go through the gross cash flow modeler. It does also require a little bit more detail on the inputs. And if you've mastered the gross modeler, the net is a walk in the park. And when we talk about net and gross cash flow modelers, from a client's perspective, the outputs are all net. We're really talking about how you input data. So in the net modeler, where you're adding an income, you need to put in the net income. So you have to have done those tax calculations before putting it in. Versus if you are using the gross modeler, you can put the gross income in and CashCalc will run all the tax calculations for you. So that's the difference between the two mainly. I am creating a new forecast, and in this case, we'll call it the current situation. And below here are all the different information points that we are sending into the cash flow modeler. I'll hit export. And you can see the different numbers along the relevant tabs. These are the different information points that have been pushed in. So I'm going to work through each of these tabs systematically. So starting at assumptions, these information points will be preset when you log into the system. They can be set at group level. So if you are on a team with multiple CashCalc users, everybody would have the same assumptions. And that also applies to this surplus income option here. If ever we have an instance in the cash flow modeler where the client is earning more than they're spending, CashCalc by default here is going to accrue that surplus money. And I've had a chat with Claire, this client, and she's basically said that, yeah, she is saving into her pension, she is saving into her ISA, but there isn't really much left over every month, and it's definitely not accruing on an annual basis. So I'm going to pop that to 0%, so we will not save any accrued, any surplus income. Next, we can go to people and timeline. The main point I need to raise here is this events timeline. So it's particularly useful for clients like Claire, who is unsure when she can retire. She knows when she wants to retire, but she's not sure when's possible. So we've got retirement here. I'm going to put that to the state pension age. And when I come to her salary, I'm going to link it to this retirement event. Then I'll be able to run a couple of what if scenarios and see the effects of her retiring at different points in time and see what impact that has. You can also drop any other life event on the timeline and then just rename it. So if you've got clients that are planning a gift to their children, house deposits, etc., or sale of a business, you can drop in these life events and put their actual goals in the cash flow forecast. Any integration is only ever as good as the data you have in your back office system. So where I pulled through this ISA from Xplan, I didn't have any assumptions on growth. So I need to edit this ISA. I need to also toggle it as an ISA. And then we have some growth rate options here. So we have two options. You can either input a linear return, which I will do for this particular one. So let's say they're getting 4.7% year on year. Add that in. The pension, however, we are going to go down a different route on the growth. So we've got the Scottish Widows SIP, £200,000. If ever you have a client with an inherited pension or a tax-free pension, you can tell the system that this is not to be taxed. And we also need to know if pension is fully uncrystallised, and if not, we need the uncrystallised pot value, and it's just so we give them the right amount of tax-free cash later on. And rather than going with a linear return, I'm going to choose a template. So there are quite a few that are built into the system as standard, but you can also build your own. So under example benchmarks, these are quite popular. They use UT sector data, and it covers quite a large time frame. For any of you that use FE Analytics, you can actually mirror these figures in FE Analytics using sort of custom return tables. And yes, so the client is a cautious investor. So rather than assuming an average just under 6% return year on year, we're actually going to assume that there is definitely market volatility. So we'll have some years with negative growth and others where the growth is quite nice. So update that pension. Claire doesn't have any DB schemes, but if she did, I'd be able to add them in here. And depending on which status you choose, the inputs will change. So if you go to active, for example, it'll ask you, is this career average, final salary? You can put details of the commutation factor later on down below. But no DB schemes for this particular client. I can add the state pension, and based on the client's date of birth and sex at birth, we know when it's going to start. So it'll automatically populate to kick in at the right age. And if the client is not getting the full value, you can edit that. But this client will be getting the full value. I've got a couple of tweaks to make on this salary. Again, I pulled it through from a back office integration with some limited information, so I am going to make some changes. But the inputs for salary, they are intuitive. You work your way through them, and where we can, we give you sort of just the option to toggle on what it is. But we're essentially here trying to work out how we should tax this income. So is it taxable? Should it be taxed as a dividend? Those sort of questions. You can also put details of any bonuses or benefits in kind, and I definitely want to link the end age of this salary to my event on the timeline retirement. We're going to add the pension contribution details in at this level. So I can include pension contributions from salary, which is a DC pension in this case, and it's found the pension for me. Client is contributing via salary sacrifice, and she is very good. She puts 10% in. And if I go to employer contributions, they're also very good and they match up to 10%. So we'll pop those details in there. One distinction I like to make within CashCalc in terms of the inputs is the difference between income and withdrawals. So I know that advisors use the terminology, client is taking X income in retirement. Within CashCalc, an income is very specifically money from an external source that is coming into the client's current account. Now, if the client is taking an income from their ISA or their pension, then we actually want a withdrawal, not an income. So incomes are typically, you know, salaries, part-time work, a one-off from, you know, the sale of something coming in, rental income, incomes, income from any of their assets that you've added in here. We need a withdrawal for that. So I've got my expenses added in, total personal expenses and housing expenditure. We can also toggle on that the personal expenses I'll put as lifestyle, and I am assuming that these are running indefinitely. I'm not going to add a transfer in here, but I'd say the primary use case for this feature would be your bed and ISA, bed and pension. You can essentially pick which pot the money is moving from, which pot the money is moving to, and then the system transfers the money. It also works well for if you are doing a joint cash flow for husband and wife, if there's any sort of asset transfers between them. Now the contributions have pre-populated for me, and that's because I put those details against the salary. So I've got the employer and the employee pension contributions added in already, and they are automatically linked to end wherever the salary ends, which is at the retirement event. We'll come back to withdrawals in a moment, but I do need to add in a charge against the pension. So you can separate your charges out. You can add in fund platform advisor. In this case, I'm just going to group things together. So we'll do 1%, and that will run indefinitely. 1.2%. Put that in. Another thing I will highlight is where we've used these mixed benchmarks as the data is pulled from FE Analytics, it is net of fund charges. So you don't need to include fund charges where you're putting these mixed benchmarks in as growth rates. So yeah, just platform and advisor is what you'd need. We'll come back to withdrawals in a moment. I think it's useful to see what the system does if you haven't added a withdrawal in. So if I hop over to cash flow model and take a look at the outputs, pretty much exactly as the client anticipated. If she retires when the state pension kicks in, she's probably going to be okay. We've got money running right up until sort of just before age 100. We've got 3 graphs. Savings over time, where each different colour represents a different one of her savings pots, and you can hide them and just focus in on one. The ISA steadily growing and then quickly being depleted, and the pension, you can really see the volatility in terms of that variable growth template, but generally speaking, going up until retirement and then slowly going down. The other graph that we have is our money in versus money out, and this here is the expenditure line, as well as the different sources of money that meet the expenditure. So we've got her salary, and then we have the state pension, and any of these pastel colours, these are a deficit that is met by savings. So in the first few years of the forecast where the client's retired, we've got a DMB, deficit met by the ISA. Once the ISA is then depleted, the system will move on to the next pot in line, which in this case is the pension, and it will also take that as UFPLS unless we've specified all of the tax-free cash has been taken. If I hop back into the inputs and go to savings and investments, we've got set pot liquidation order, and this is how the system is doing that. It's looking at this list and saying, well, which pot has money in it at the top of the list? The current account had nothing, so it moved straight onto the ISA, spent that until it was depleted, until it was fully gone, and then it moved on to the pension. You can reorder them if you want. I'm going to keep it at this order. The client is actually contributing to her ISA each month. So if I click to the ISA and add in ISA contributions, this is a personal contribution, i.e. money from her current account going into the chosen pot. She's put in £350 per month, which is probably going to stop when she retires. Add that in. So appreciating in this forecast, we've assumed the client is spending her ISA until that's completely depleted, and then she's going to move on to the pension. It might actually be more likely that the client will do a combination of both. So I'm going to hop back to my inputs, and I'm going to specify via withdrawals how to meet the shortfall during that time period. So the client is planning on spending, so let's say ISA spends £8,000 per year from the point of retirement until as long as it's possible. spent from the ISA. And then anything more required beyond that is going to be covered by the pension. So I'll put that to the top of the list. Update. Now, if we go back to the cash flow model, the money in, money out graph is going to look a little bit different. So we now have these bars for the ISA spending, and then the shortfall is reduced during that period, but we're topping up. So through retirement, client has state pension, ISA withdrawals, and a top up from the pension via UFPLS. We also then have a third graph for the taxes that are paid. And if we go over to the yearly breakdown, these are the numbers that build the graphs. So we have the client's liquid assets at the start of each year versus at the end of each year, and everything that's happened in between. Now, if we click into a year, this is also where you're going to see how we've taxed things. So where we had that salary, we've taken off the pension contributions, adjusted the taxable earnings, and you can then see how much of that salary is landing in which tax band: personal allowance, basic, and higher rate. You can also see details of each pot, so you can see how things like inflation, growth, contributions, withdrawals have affected a specific pot in any given year. And we also get insights on some years when things are happening slightly out of the ordinary. So this could be things like the MPAA being triggered, or if, for instance, in a year a client is putting too much in an ISA, if it breaches that £20,000 limit, the system will give you an insight to say that needs addressing. So once you have your base forecast, most people using CashCalc are creating clones and what if scenarios. And this particular client was interested in knowing, well, what happens if I retire a couple of years earlier than state pension? Can I do it? So we'll go to the plus symbol at the top and call this retire 2 years earlier. And I want to clone my existing forecast. We've had a question come in about things not rising visually, you know, the numbers not getting larger nominally throughout the forecast. I will absolutely come on to that, but bear with. So we've now got two forecasts along the top. We've got current situation and retire 2 years earlier. At the moment, they are carbon copies of each other apart from the name. So ensuring that we are in this retire 2 years earlier forecast, I'm going to go to the people and timeline and put retirement 2 years earlier at age 65. That will have changed her income to finish 2 years earlier. It's changed all of the contributions. Anything that was linked to retirement has now shifted. It's also changed the start of the withdrawals. These are now starting at that point. And if we go to cash flow model, yes, they are now running out of money before sort of the very, very end of the forecast. But if I compare the two forecasts here, we've got ending with sort of 200k versus ending with not much, but still seeing it through. And this ability to clone gives you such flexibility. You can really build anything. You create a clone, you add in whatever what if scenarios. And then once you're happy with the forecasts you've built, you can create a report and include both or just the one forecast. There are also some optional extras, which I'll keep out for now, but we'll PDF that report. And it will go through the different tabs that you worked through, and then it gives you the graphs. and the non-expanded version of the yearly breakdown. Now, the question in the chat was, why are the expenses not increasing every year? So by default, CashCalc is set up to produce results in real terms. So if we look at stop comparing. If we look at this graph, for example, our expenditure is a flat line. So we've got inflation at 2.5%. And we've got expenses at 2.5%. So they cancel each other out. We are assuming inflation is at play here, but we're doing it in the background. So where we're seeing savings at retirement 65, this figure here is in real terms, today's money. So the nominal value of the client's savings at retirement, which is what, 13 years in the future, is likely to be higher than this, but it's going to have the purchasing power of what £630,000 has today. It's the same for things like the state pension here. You know, we know that that increases nominally. We've got the triple lock built into this state pension input. So we know that it will increase each year on a nominal value. But when I receive it, if I receive it in many years, it's still only going to have the purchasing power of what it currently has today, so just under £12,000. And that's the reason why we have everything in real terms. It gives, I think it's, you know, clients can understand the value of money today and assume that is being carried forward. It's harder to think of money 40 years in the future and what buying power that's going to have. So real terms. So I've covered everything that I'd hoped to cover today. As I say, we do have these resources available for any follow-ups if needed. I'll hang around and check through some of the questions just to make sure I haven't missed any. But thank you so much for coming along today, and I hope everybody has a lovely rest of the week. Take care. Thank you. I think I've answered all the questions in the chat box. They've all been answered either by me or a colleague. So yeah, no more to say. I'll stop sharing and end the call. Have a lovely rest of your week, everybody. Bye.